Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be looking at whether you should ever short Bitcoin. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. And if you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just on the Bitcoin funding rates chart here on lookintobitcoin.com, and what we can see here is the current rate of funding traders are having to pay to keep their positions open on a number of different derivative exchanges. So we can see here we've got Binance, Bybit, and OKX, and the funding rates, like we said, if you didn't already know, every time you open a position on a derivative contract, such as a futures contract, you'll have to pay to keep that position open. So in traditional markets, this is usually a rollover cost. So if you hold a position overnight as the market closes, but as the Bitcoin market and all cryptocurrency markets are 24/7, usually in 1 hour or more frequently 8-hour intervals on a number of exchanges, you'll actually have to pay a fraction of a percent usually to just keep your position open. And what we can do is use this Bitcoin funding rate chart to gain an insight on what the majority of the market is currently placing their bets as the next move for Bitcoin is likely to be. So we can see here when this funding rate dips substantially to the downside, it means people who are short Bitcoin, which is betting on the price decreasing, are having to pay just to keep their positions open. And we can see this is quite an inversely correlated chart. So once we see this increase to the upside, so more people are betting on Bitcoin's price increasing, they're currently long, this usually aligns with the market overheating, especially once we see huge spikes to the upside in this funding rate. And again, once we see huge spikes to the downside, a vast majority of people are betting on Bitcoin's price decreasing further. This usually marks a turning point for the market when we see a huge price jump to the upside and just wiping out all the profits and liquidating all the people shorting the market. So what we can do is use data like this, and obviously we're all in Bitcoin and cryptocurrency for the technology, but the fact you can make some profit as well is a nice benefit as well to all of this. So you may see this chart and think, well, if I can play this counterintuitively, maybe I can short when we see huge positive funding spikes, maybe I can long when we see huge negative funding spikes. Of course, this isn't a bad strategy, and you're likely going to outperform those that are just blindly going into things based on a gut feeling or something they saw on social media. But there are a number of things that you need to take into account before you do start shorting BTC or other crypto assets. So what I've loaded up here is a futures calculator provided by Binance. Now what this is doing is giving us an insight into the potential profit you could make for either longing or shorting an asset. So right now what I've just loaded up here is if you were to short one BTC at around the current price as I film this of $30,000-ish, and you were to short that all the way to the low we set, well, around the low we set at $15,000, you would actually make a 50% profit on your position as price has decreased 50%. So not bad, you'd increase your stack 50%, so pretty good. But what we can do is actually compare is if you were to do a similar move by just longing the asset. So if we, rather than shorting at $30,000, we longed from $15,000 to $30,000. So the same move, but just in reverse. What we can actually see is the difference in the profit you'd actually make from doing such a move. What we could also do is double our position size because the price has decreased 50%. And suddenly you're making 100% return on your investment, and your profit is increased from $15,000 to $30,000 because you could also increase your position size. So shorting the market not only is quite difficult, but you also need to take into account that your profits are actually limited just by the fact that as a price decreases, it can only decrease a certain amount. And I know what you're thinking, well, what we can do is just increase the leverage slider, but I implore you to try this out yourself. You can do this, and we could see if you're on 10 times leverage, which I definitely would not recommend for frequent trading. But what we can see here is with a 10 times leverage, it would increase your return on investment 10 times, but keep in mind the chances of being liquidated by doing so. So 10 times leverage longing would be 1,000% profit on your position. And again, we'll just do the exact same position we did previously, shorting from $30,000 down to 15. We'd have to reduce the quantity. And we could see again, it's still only half the amount of profit. So even on leverage, shorting the market limits your potential for profitable earnings. Now, of course, if you can time the market perfectly, then you do increase your chances of profitably being able to short the market. What we can do is look at something like the Bitcoin profitable days chart that shows for 88.9% of Bitcoin's entire history, you would currently be in profit on your long position. So what we can say is for only about 1/9 of all of Bitcoin's price history, you'd have been able to open a short, still have it open today, and currently be in a profitable position. Whereas for nearly 90%, you could have opened a long position, still have it open, and be in profit. And of course, this is simplifying the fact and negating that you would have liquidation risks, and as we spiked to the upside, maybe you'd have been stopped out of your position, and especially if you tried to short down here on the initial retracement we had from the first all-time high we set above $60,000, you'd have had to have huge capital reserves to be able to just keep your position open, like we said, without getting liquidated, which is the exchange forcefully closing out your position if you're trading derivative contracts. So this would have been a very expensive task just to try and make profit on the way down. But like we said, the maths are in your favor for longing. If you just longed at the bottom rather than shorting at the top, you'd have already far out profited the trader that tried to short the top. So a lot of caution is advised if you're ever to seriously consider shorting the market. But for me personally, I prefer to take it a little bit easier. Crypto is already speculative and volatile enough. If you just trade spot positions, there's no risk of liquidation. There's no constant funding rates you have to pay. And it's generally just easier and a nicer life to be more bullish on an asset that has gone up exponentially for over a decade now. So just to summarize, shorting Bitcoin is the process of betting on the price of BTC decreasing. And as you cannot short spot or real Bitcoin, traders have to utilize derivative contracts such as perpetual futures or options contracts. And these derivatives often can be traded with leverage, which increases your market exposure by essentially just borrowing capital from the exchange. This gives you the chance of liquidation, and like we said, the funding rate you'll have to pay just to keep that position open. And given this increase in fees and risk of shorting the market, the downward profit limitation and general difficulty of shorting an asset that generally trends substantially to the upside, I definitely can't advise shorting. Now, of course, there are going to be people that do recommend shorting, and especially shorting with leverage. And all I'm going to say is if you definitely have your heart set on doing so, is be very aware of the risk. Keep your position size very limited and don't risk too much of your capital at any one point, and just understand the risks and maths behind doing so, and really weigh up the pros and cons compared to just longing Bitcoin and crypto assets and routinely taking some profit. If you liked this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live charts, in-depth newsletters, indicator alerts, private TradingView strips, and more, all for a fraction of the standard industry price. And let me know in the comments down below and on social media, do you currently short Bitcoin and crypto assets, or are you like me and just prefer to simply buy spot holdings, spot BTC, and have a much more relaxed and chilled experience investing in the crypto markets? As I said, let me know. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.